The average household consumer debt in America is $145,000. That means you have $10 in your pocket and no debt, then you have more wealth than 15% of American households. And let's say you invest that $10 today in a safe S&P 500 mutual fund, and you keep it there for the next 50 years, and the market continues to grow at a conservative 7% growth, then you would have $294.57 at the end of that 50 years. I know the initial reaction is, wow, 50 years to make a couple $100, that's ridiculous. But in my opinion, this is the best way to invest. While buying individual stocks like Tesla or Amazon is way more fun and can earn far more money, for the uneducated, and often even for the educated, buying individual stocks is fairly similar to gambling. This is because stocks go up or down based on how many people are buying and selling them. As more people will buy a stock when they think that the company will grow in the future, and will then sell a stock when they're afraid that the price is likely to drop. This means when you invest in a company, you're really just hoping that other people also like the company and will purchase stock in it, which will drive the price up, making you money. And that's why stock prices can behave very similarly to whatever is happening in the general consensus of our society. So for example, a lot of people today think that electric cars are the future, and so they're all going out and buying Tesla stock, which is driving the price of Tesla up so high that Tesla's actual profits won't come anywhere near the value of the company as a whole. And I believe that 2020 and 2021 have caused a lot of people to believe that the stock market is a great place to get rich quick due to the seemingly unstoppable growth that has occurred this past year and a half. But unfortunately, I think this is brought on by a wide variety of different factors, and this growth is not indicative of what's to come. The first reason is that the government artificially injected trillions of dollars straight into people's pockets, and many people chose to invest that money into the market, and this dramatically raised the prices of stocks and the market as a whole. Another huge change that's come to the market in recent years is that there's far more investors today than there have ever been, thanks to mobile apps like Robinhood, which has given the power of investing to each and every individual out there without any barriers to entry. This has changed the rules of the game, and the old philosophies that ruled the market no longer exist, as experts can no longer predict how the market will move in these unprecedented times. But I say all that to say this. Yes, investing in individual stocks is fun, and you can make a lot of money doing it. But just like Vegas is fun and you can make a lot of money there, you should only go to Vegas with money that you're willing to lose. And that's why I don't believe everyone should invest in individual stocks, unless it's with money that you're willing to lose and you don't care about. But I do believe that everyone should invest in safe mutual funds. So a mutual fund is similar to a stock in that you buy into it, but instead of buying a piece of one company, you're buying a small piece of every company contained in that fund. So an S&P 500 mutual fund will contain a different percentage of approximately the 500 largest companies in the S&P 500. And investing in one of these funds is as simple as going to a website like Fidelity and opening an IRA, Roth IRA, or just a regular account, and then putting a couple bucks into one of their low-fee mutual funds. And if you've never invested before, then this is by far the safest and easiest way to get started. And I suggest you just start by putting a few dollars in, and then whenever you can, you add a little bit until you're more comfortable putting more and more money into the accounts. And the reason you're going to want to have money in an account like this rather than just a checking or simple savings account is because your money's going to grow relatively risk-free as long as you give it enough time to grow, and it's going to protect you from the monster known as inflation. This scary word is the idea that as more money is added into an economy, the less that money is worth. Currently, the average rate of inflation is around 2% per year, meaning that your money's ability to purchase something drops about 2% every year. And now that the government has shot a stimulus straight into most American bank accounts, many believe that this could make inflation grow even faster, further devaluing the dollar. That's why letting money sit in a checking account is actually losing you money every year. And that's why investing is so important. It allows your money to grow instead of stagnating and depreciating over time. But be careful. While some people do make a lot of money investing, it's very easy to lose money. And over a 20-year period, 95% of investors don't beat a simple S&P 500 mutual fund. Think about that. An investment that takes no more than 20 minutes a month to purchase will make you more money than the hours and hours that 95% of investors put into buying individual stocks, as long as you're willing to wait. And I know waiting is the hardest part, and it's human nature to want to see results immediately, and it can be really difficult for us to conceptualize results that won't be seeable for decades. But if you are able to go out and invest in these funds and ignore the people telling you how much they're making on Dogecoin and how you should start buying crypto, then you will statistically be better off and your future self will thank you. My advice would be that you don't even look at the investments in a Roth IRA or mutual fund more than once a year, because it doesn't matter how much it grows or shrinks in the span of a year. All you should really care about is the long-term growth of the investment. There's a lot of average people out there who will spend hours and hours meticulously buying and selling stocks, and for what? Maybe a few $100 profit over the course of a month, if they're lucky. The ROI for the amount of time many people, including myself, have spent staring at graphs is laughable, as there are far, far better ways and easier ways to make money in the stock market. I'll leave you with this. Everyone should invest, but there's no reason to spend hundreds of hours picking stocks, and there are far safer and easier ways to invest than buying and selling stocks in the short term. All anyone needs to do is place their money in a safe, low-fee mutual fund and look at that money as little as possible. So get out there and invest, but be wary of anyone that tells you you can get rich quick, as you're much more likely to come out ahead with a slow and steady approach.